So today we're going to jump right into it with this diversification strategy of anything but dollars, increasing your wealth. The disclaimer is these are always informational purposes only. I'm not a financial advisor. I think you know that. So 3 days a week, I do what I call the dollar is dead, pointing out the US dollar always loses value over time, meaning because of inflation, you can buy less and less. So from a 1,000-foot view, diversification allows you to invest in things other than just holding dollars, such that they will go up over time as dollars are coming down over time. That's what the rich do. They don't sit around with dollars. They invest it in things like real estate, commodities like gold, stocks and securities and bonds, you name it. So instead of just discussing the strategy, back in February of this year of 24, I decided to put together this little basket of goods, so to speak, and we go through it every Friday to see if things are worth more than if you had just had dollars sitting in the bank. Let's jump right into it today. So we start with here, FDIC, every month it puts it out. These are the same as last week. We look at the savings rate. You get 0.5% on average as a savings rate. I know there's some accounts out there giving around 4%, but those are going to go up and down with interest rates. 3-month CD, 1.5%, Treasury yield, 5.4%. Great. So those are cash or cash equivalents, right? You've either got cash in the bank or you've got equivalent of a 3-month CD. Let's compare that to inflation. Inflation, as you can see, 2.9% in July. All right, so that's about 3%. So after you put your money in one of these three investments, in a bank or a treasury, you receive a return, you pay taxes, and you're lucky if you even beat inflation. Inflation, real inflation, true inflation, as we showed a while ago, is actually much higher. And over the last couple of years has been significantly higher. Look at where it was just last September. And it was even way more 2 years ago. So you're losing money if you're just holding on to cash. So let's hold on to other things. So here we go. We look at these four next. Commodities. Gold is at 2,507. Back in February, it was just over 2,000. It's a $500 gain on 2,000. That's a 25% gain. That means that equivalent of cash would be, instead of having $1,000 in the bank, 25% gain, you'd have 1,250. Whereas if you had a 5% rate, you'd have 1,050. All right, silver's at 28.91. And back in February, it was 22.88. Then we look at these two cryptocurrencies because if you know anything about crypto, these are the two largest market cap. Bitcoin is very different than everything else. It's at 58,000. It was at 43,000 earlier this year. Ethereum's at 2,400. It's the largest of what they call the altcoins in terms of market cap. Earlier this year, it was 22.99. So as you can see, all of those commodities, if you will, are worth much more than they were back in February. Dow Jones. It's Dow Jones Industrial Average. It's 30 stocks. People like to watch it. Here it is with a 1-year time frame. As you can see, it goes up and to the right, sitting at 41,200. Back in February, it was a little over 38,000. A larger, broader index is 500 stocks called the S&P 500. You can actually buy a fund or an ETF that mimics the S&P 500. So you don't have to buy 500 individual stocks. You can merely buy the index and it buys those 500. As you can see over the last year, up and to the right, sitting at 5,600. Earlier this year, it was just over 4,900. Both of those have gone up. Even on a 5-year, it's gone up significantly. I don't know how far back they go. It looks like they go back to 1996, up and to the right. Not what the dollar does. The dollar has lost over the last 100 years 99% of its value because of inflation. All right. The two things we like to look at is the 2-year Treasury note and also the 10-year Treasury note. So the 2-year note is giving 3.929. All right. The 10-year, 3.907. They're very close. It hasn't done this in a while. So the 2-year is giving a higher rate than the 10-year. That means they're inverted. When they're inverted, that typically means we are in or going into a recession. As you can see from this chart, they have been inverted for quite a while. Back since 22. That's a long time. Today it's showing an inversion of 0. But as you can see, they're still not uninverted, but it is very close to being uninverted. Now that typically is a good sign. You want them uninverted because that means people have more confidence in the long-term markets because they're willing to give a higher rate on 10-year, locking up money for a long period of time, than a 2-year, locking up money for a short period of time. So they're about to be inverted. I think that's a good sign. So that's it for today. As you can see from the chart, what I'm trying to point out, and if you don't already do this sort of thing, diversify into other investments, it's that from that first chart, and I'll show it here again, the dollar goes down in value because of inflation, meaning you have less buying power. So you can save dollars for a long time, and I have a calculator showing if you save money over time, and then you add in inflation, and you add in taxes, and I'll put a link to that calculator, you can see whether or not your money is even more valuable or not. Just because your $10,000 goes to $11,000 over a 10-year period of time, or a 5-year period of time, doesn't mean you technically have more buying power. It doesn't matter how much money you have if the price of goods have gone up substantially, like cars. If you were saving for a car for the last 5 or 10 years, and you got your $20,000 to buy that car, but now the car's $30,000, well, that doesn't help you. What the rich do is they put it into assets, because dollars go down, assets go up. I hope this makes sense. Thank you for watching. Please do subscribe if you find value in these. And then during the week, I put out many videos on different ways to help you get out of debt and calculators so that you can do it for yourself quickly and easily. Have a great day. Thanks for watching.